Andre, welcome to this chat with Mario Boone TV. And ladies and gentlemen watching, my very special guest is none other than a financial advisor, financial guru. He owns his own wealth management firm. I've known him for decades. It seems like it's been decades. Mr. Andre Williams. Andre, welcome.
Thank you, man. I appreciate the opportunity to be with you today. And hello, everybody out there. Hopefully we can have some good conversation, some good dialogue, and learn a couple things.
Yeah, Andre, you know, you and I talked about doing this for a long time, and we finally have the opportunity to do it. And I think I speak for you, but I'll let you say your piece. But I think one of the reasons why I wanted to bring your level of expertise to the table is so that people, you know, we perish for a lack of knowledge.
Absolutely.
And you have such an immense knowledge when it comes to finances. And I really think people, certainly I can. I mean, I know just from the talks you and I've had this week, I've been able to really put some things in perspective. And, you know, and in full disclosure, I'm about to open my own brokerage account with you to try to position myself better financially. So I think people at home watching this will have an opportunity to benefit tremendously from your knowledge. And certainly that's what I hope. But in the meantime, Andre, just give us a little bit about your background, how long you've been doing this, kind of what your path has been in this career that you've taken.
Sure. So I am an independent financial advisor, independent meaning that I'm not captive with any particular company. So I'm able to have leeway and the freedom to look at all the various investments, insurance products that are out there with various companies without having the captive title behind my name. So I got into this business almost out of college. When I first graduated from Morris Brown, I went and worked at Georgia Pacific for about 6 months. That was the year that 9/11 occurred. So it was a last in, first out type of situation. But that was long enough for me to know that I didn't like the whole corporate structure. I was selling home building products, lumber, you know, plywood, and nails and roofing and so on and so forth. I was a business major, BS finance major. And so I wanted to stay in Atlanta, had opportunities elsewhere, but I said, no, for some reason, Atlanta felt like home and this is where I wanted to stay.
You have extensive knowledge in the area of finances.
I like to think so.
Okay, good. I didn't mean to cut you off, but I wanted to just get to the bottom line for people to understand. You know your business. And folks, people watching at home, he kind of gave it away how we know each other because, of course, I graduated from Clark Atlanta, one of the top tier HBCUs, and then you went to Morris Brown, you know, which is kind of on the low end. But
oh, we got jokes today. Yeah, okay. We ought to come back, man.
No, I'm just kidding. You know, I love my Morris Brown people. So, Andre, let's dive right into this thing. We got a couple things that we want to talk about, but I want to start us off really quickly talking about stimulus checks. Everybody is hunkered down, waiting for this second round of stimulus checks if Congress can get their act together. We do expect that another stimulus check is going to come out. It's just a matter of when and how much. What do I need to do when I get this stimulus check? And I ask this because you know us, we get that check. First thing we want to do is run to the mall. We want to make it rain. And you say, don't do that.
I say don't do that. Put all the spending on pause. And you have to treat this pandemic as if the second wave is coming and we might not get another stimulus. So if you're fortunate to get this next $1,200, use it. You got to eat, right? So you might pay your utility bill. The necessities of life are really what you're trying to address at this time. So everything from a budgetary standpoint is bare bones. So that $1,200 probably needs to be parked in cash. If you don't have adequate cash reserves, adequate being, and Mario, you and I have talked about 6 to 12 months living expenses, but if someone has less than that, then that might be money you need to just set aside and have for additional reserves because your job security may be at risk. If the government decides that they don't want to continue the PPP program for your employer as a business owner, then that employer may say, hey, listen, I kept you on the payroll because I had to as a result of the government stimulus that gave us the PPP monies. But now that I'm not getting that anymore, I'm gonna have to let you go because a lot of businesses simply cannot afford to keep people on payroll without that governmental support. So if you happen to be one of the people that get let go, what are you going to do? So if you went out and spent that money on, hair, nails, or, popping bottles, then you really are probably being a little bit not forward thinking about the need to protect yourself should things get worse before they get better.
So basically, again, pause all spending. Don't take the stimulus check and run to the mall, run to Magic City.
Absolutely not. No.
You want to go get a new, you can't buy much for $1,200, but some of us will want to run out and grab a new Louis bag or something. Just don't do that.
And if you think about it, the dynamics of the family structure have changed too. The kids are at home all day. It's summertime, so the grocery bill is probably going to go up. If you still work and school comes back around, you might have to have babysitters and stuff on the weekends if you have to go to work. So that money it needs to be used only for essential items. In fact, you want to look at your budget and see where you can actually make some cuts to your expenditures. So do you really need to have Netflix, Hulu, Stars, HBO, and Disney Plus all for the kids and yourself for entertainment? Make the cuts where you can. Look at your cable bill. If it's $200, $250 a month or what have you, call the company and say, hey, listen, I'm thinking about possibly, cutting the cord or leaving you guys. What can you do for me? There's ways these companies will want to keep you as clients or customers. And so they can show you how you can make some cuts, but figure out how you can get lean when it comes to your budget, and any monies that come in, like that stimulus, keep it as cash reserves.
Let's say that some of us, when we get a lump sum of money, we like to pay down outstanding debts.
Mm-hmm.
Should you take that stimulus money and use it to pay off debts that you might have outstanding?
Well, I would say it's situational. I would say that depends. So when we talk about cash reserves, if you get a good amount of cash reserves in the bank, the 6 to 12 months, but then you got some debt, and let's say that debt is expensive credit card debt, where the interest rate is maybe 24%. Well, that 24%, that can actually, be expensive over time. Now, I'd probably first call the credit card company and ask for some sort of a forbearance, see if you can get that first. But if they say no, and that's an expensive debt, then it may be something to consider to possibly try to pay that down to get yourself out from underneath the weight of that debt. But typically, if you don't have, like I said, don't have the reserves, I'm big on cash flow management at this current time. Reserves would be the place to go with that. Then there are some other ways. If you had a cash crunch, the government is giving you some opportunities to give you a little bit of reprieve. One is for your student loans. So if you have, this is federal student loans, you have a forbearance, or you don't have to pay the loan or the interest until after September 30th of this year. So that's the government's way of saying, hey, we're going to try to help take some pressure off your pockets for a period of time with that particular opportunity. If you have retirement plans, the government's also allowing you to tap your retirement plans. I wouldn't recommend this only unless you really, really need to do so. And you have to have a financial hardship that's COVID related, okay? But what they will allow you to do is take a hardship withdrawal up to $100,000 from your retirement plan. And you don't have to pay the 10% penalty that's typical if you're under the age of 59 and a half. Also, you can take loans up to $100,000. So, if you only needed, $4,000 or $5,000 and you didn't have any other resources, maybe you can look at your retirement account and utilize that for purposes of kind of bridging that gap. It is taxable. You can pay it back as well, but that's just, again, that's kind of the emergency red button. I don't have any other resources, but here's something I can tap into for my needs.
Yeah, this wasn't on our list, Andre, but I'm going to throw this out because it just came to me as you were talking. We were talking about outstanding debts, but what about potentially filing for bankruptcy? Is that something people should consider, or is that kind of, you want to stay away from that? Trump did it 4 times. So
yeah. I would say stay away from that if you can, because it has so many ramifications associated with it. If you can get more lean, cut the fat, if you will, out of your budget. And you could also, when it comes to your mortgages, so anybody that has a federally backed mortgage, that's Fannie Mae, Freddie Mac, or an FHA loan, you can actually call to get forbearance on your mortgage for 6 months. After the 6 months is up, you can call to get forbearance for the next 6 months. So, I've given you several ways that you can help to free up some cash flow potentially to weather the storm, so to speak. These are things that can allow you to avoid the bankruptcy if at all possible.
Gotcha.
Yeah.
All right, so here's the other thing on our list here. So we kind of touched on it a moment ago, cutting expenses, you covered that. Unemployment. Now we know, especially now, a lot of people, record numbers of people have filed for unemployment. Jobs are at a standstill because of COVID. Some of these jobs just will not come back. We know that. And God forbid anybody watching right now is in that predicament. But what can you recommend for a person who is going through unemployment right now and facing the prospect of long-term unemployment because their job just is not coming back?
Yeah. So, if your job is not coming back, then one of the things I probably recommend is, hey, get out that resume, polish it up. Okay. Start tapping into your network, trying to find out what might be out there, assess your personal skill sets, determine what other business opportunities there might be out there, because obviously everything's kind of at a standstill right now. But I mean, there are jobs that are hiring. I mean, Amazon's hiring right now, right? So kind of assess the marketplace, assess your skill sets, and determine, what you might be able from a skill sets perspective, what you might be able to kind of reverse engineer, re-engineer to go back out for the job market in possibly a whole new direction.
Mm-hmm.
But this is the time during quarantine to think about those things and prepare. Because I was just listening to a call earlier today about the restaurant business. These restaurants like the pizza delivery places, they realize that, hey, we don't need to really have all these tables for sit-down meals. We're not actually missing a beat when it comes to our profitability. We're still making as much money when people come to our drive-through. And so they might decide they can shrink their business model and not include people or workers inside. People that have office space, they're saying, hey, we don't need to have all these offices, so we can possibly cut our budgets, cut some people, and still be as profitable or what have you. So if it's a work from home environment that we're moving into, think about what that might mean for you and how you might be able to make that transition to a work from home model.
Do you think that a lot of companies right now are looking at this new normal that we're operating in during COVID and saying, how can I, when we come out of this, how can I operate at a reduced staff or reduced office, for example, so that they can spend less and make the same or more?
Absolutely. I mean, in business, it's all about profitability, right? And if you can cut expenses, then you certainly will, especially if it's not going to impact your margins or actually improve your margins.
I kind of feel like we're in a test mode where companies are evaluating when we do go back to the old way, how they can, do more with less is what I call it, and make more.
Yeah.
That's kind of what I feel.
Yeah, and I think you're absolutely right. How can we do more with less? And so if the numbers are showing right now that our profitability is not taking a hit, now it could be because of increased traffic to the drive-through windows because people can't go to other alternatives. So once the economy starts to open back up, how will those numbers look? But yeah, companies and the executive management teams are certainly trying to figure out how can we right-size this so that we could possibly shed some additional expense, especially those public companies, because they're trying to bring value to the stockholders, right? And so every company's trying to be as profitable as possible, bringing in as much revenue as possible, reducing expenses as much as possible to make that happen. It's called increased margins over time. So you have to kind of realize what the playing field looks like and make the adjustments necessary so that you can always be competitive in the marketplace.
Okay. Last on our list is something that we don't like to talk about, but is absolutely necessary, and that is life insurance. Because we see all the time people die and their family members left behind are on, these websites raising money for a funeral.
Yeah.
And it's so sad. It's the saddest thing. But it's a fact of life. You come into this world, you got to go. And you don't ever want to leave family behind scraping and trying to pinch together money to bury you.
Yeah.
But we're in COVID, and the unfortunate thing about COVID is that people are leaving every single day. We're at 151,000 people dead from COVID and more likely to follow. but we also are faced with the prospect of being without employment, or
Yeah.
not enough employment.
Right.
How do you move in that space of making sure you have adequate life insurance so that if, God forbid, you get stricken with COVID or you walk outside and get ran over by a bus, that
Yeah.
you have
Yeah.
enough money to take care of the funeral expenses?
Yeah, so life insurance is definitely one of those what I call equalizers, because if you did not have assets from whether it's retirement or investments or any type of assets to leave to your family in the event of your death, the life insurance policy is what's going to replace or provide the assets that you would like for your family to have to replace your income, pay off debts, et cetera, et cetera. I think that oftentimes we don't have the right mentality about life insurance. We'll say, hey, I made it, they can make it too, or what have you. But with COVID-19, I mean, everybody could potentially be exposed and possibly face the risk of death. It's probably elevated, especially if you already have some health issues prior to COVID. But, run the what if scenario. If you passed away, what would that mean for your family? You may have a job right now and you got some life insurance through the company. Oftentimes those group plans or group life insurance is about $50,000. So if you're making, $50,000 yourself or $100,000, that's 1 times your pay or less. And so you need to have the additional coverage, especially if you have young kids at home that have to be fed, raised. If you're talking about trying to take care of some, pay for some school or pay off the mortgage, whatever those things are, you probably need to make sure that you need to have more resources. And a cheap term policy is probably the best way to go to keep.
So you're saying a term policy in addition to any work life insurance you already have?
Absolutely. It's called supplemental life insurance because you're supplementing the coverage that you have with your employer. And so if there's some downsizing possibly coming in the future from these employers who no longer get the government assistance to pay you, then that means that the life insurance you have with the employer today might be gone tomorrow. So you need to get your own policy that is yours, no matter if you're with that company or not. And I'm saying term insurance because it's the cheapest form of death benefit protection that gives you the maximum amount of benefit should something happen to you.
Mm-hmm. All right, Black folks, I hope you're listening. And my Hispanic brothers and sisters, get you some life insurance. Get you some supplemental if you already got it through your job. But get you, and Andre, they don't need to go out and get the Cadillac version of the life insurance, right?
No, you don't need to get the Cadillac version. And be careful too. There's some people out there that will try to sell you on, the permanent life insurance coverages, which can be good, but it's all circumstantial and based on your situation. If you're trying to keep costs to a minimum, you're trying to save money, you need to get term insurance. That's probably the best approach for you. The Cadillac coverage is going to be things like your whole life insurance or index universal life or variable universal life. Those are more expensive, and you also get less death benefit protection with those. Term insurance, again, that's the cheapest, gives you the maximum coverage. You can have a 20-year term policy. You can have a 30-year term policy. It's all, whatever the rates are, going to depend on what your health is. So if you got some health issues, if you had, certain things won't allow you to get insurance coverage, that's a different topic of discussion. But if you're healthy, it's certainly probably the way to go if you're trying to be cost conscious.
Okay. We got about 10 minutes left on the show, Andre. You had some slides and some other stuff you wanted to get into still? Sure.
So just want to give some perspective on some of the things that people need to be thinking about when it comes to kind of things that they need to be doing right now. Okay. So I'm going to get to that real quick here.
And once again, everyone, as Andre gets his slides together, this is Andre Williams you're listening to and watching from Pivotal Wealth Management, longtime financial advisor. He's certified. He's the real deal. He's been to school for it. He knows his stuff. Okay,
so Mario, so here's what I was talking about earlier. Here's step one in what you want to do. These are things that you can do right now as we're in this pandemic stay-at-home economy. Thing you want to do is you want to review that budget and cut expenses where you can. So that means that if you're doing a lot of Uber Eats, expensive cable bills, cell phone bills, everything that you have, auto insurance, make some phone calls to see where you might be able to make some cuts.
Yeah.
You could also ask for reprieve from some, the insurance company. If you're renting, speak with the landlord and see if you could possibly get some forbearance or reprieve. Evaluate your job security, because this really is going to be the telltale of how aggressive you need to be with cutting your expenditures. So is there a possibility of downsizing? Have you gotten word that your bonus might be eliminated for the year? Understand those things, because that'll get you more laser focused on the things you need to be doing from a budget standpoint. That self-imposed spending freeze, you got to do it. And you got to just make the assumption that things are going to be worse for longer than we initially anticipated. This pandemic has actually allowed us to save. It's a forced savings because nobody's taking trips. Nobody's, going across country or some of the things you normally do. So take those dollars that you normally use for summertime travel and put those to the side in that cash reserve that we talked about earlier. For those that have retirement plans or investments, you want to review your portfolio. Depending on where you are in your career, if you're close to retirement, there might be some adjustments you want to make to help protect what you've accumulated. If you're a long-term investor, the dips in the market represent opportunity for you to possibly allocate more money into the markets for growth potential going forward. With COVID-19, the possibility of being exposed to that and the risk of your demise has increased somewhat. So make sure you take a look at all the beneficiary designations you have on your 401ks, IRAs, brokerage accounts, life insurance. I've had clients in the past who forgot about the beneficiaries on their forms and had their ex-wives or ex-spouses still on the paper.
My goodness. That's the last thing you want to have happen is the ex-wife to show up to take over the account from.
And what do you think is going to happen? That ex-spouse is going to say, thank you, and no, I'm not giving y'all anything. And legally, they're well within their rights because they were still on the paperwork.
Wow.
When it comes to the trips that you might have already prepaid, you want to try to get that refund if you possibly can. I know there might be a challenge because the people that own the homes and the Airbnbs, they want to keep the money, but try to push and get that money back. And the good thing is that when you rebook to go somewhere because of COVID-19, that price will probably be a lot cheaper on a go-forward basis. And then finally, I'm a big family guy. Check on grandma and them and make sure they're good and they have what they need. They probably can't go to the grocery store like they used to. So, check on them, their medications, et cetera, et cetera. So make sure you do the family check-in on the people that are maybe sick and shut in or need your support to a higher level.
Yeah, this is some good stuff right here, Andre. And I have to make a quick admission because a few years ago, I was transitioning from a job in Atlanta.
Mm-hmm.
And I was moving from down south to up north, and I had got a really big severance payout from
Mm-hmm.
my job.
Mm-hmm.
And one of the things that when you're addicted to retail like I am, there are some things that just call your name. It's like a little whisper.
Yeah.
It's like a nice pair of sneakers or something. It just calls you. And I can recall, this was back in, I think, 2016. Mm-hmm. And I wanted this Burberry jacket so bad. I mean, it was so nice. And the jacket, I'm almost embarrassed to say this, Andre, it was like $3,000 or something like that.
Whoa, a jacket?
But I didn't buy it, but I'm gonna tell you, I was so tempted, and the Lord had to pull me back from the edge, okay?
Yeah.
But I took that money and I bought a small plot of land that I still own to this day, and it's worth way, way more than what I paid for it.
Mm-hmm.
But I remember taking a picture standing next to the plot, and I did a side-by-side of the coat that I almost bought and the land that I did buy.
Right.
And it was one of the best things that I did with my money. And for me, that was kind of like my breaking point where I was, because I used to be really reckless with how I spent. I would just buy, because I'm single, I don't have any kids, so I could just go buy whatever I wanted to. And, growing up like I did, not having a whole lot, growing up in Section 8 housing, as an adult, I'm able to buy things that I couldn't have when I was a kid.
Yeah.
So that was part of the psyche of reckless spending. I would just go and buy stuff just because I could,
Yeah.
So,
well, the thing is, we need to do a better job as minorities of understanding like what assets are, right? And things that
bring us back from the share screen, Andre, so people can see you.
Oh, I'm sorry.
Yeah.
I'm sorry.
But yeah, you're
Yeah,
right.
so
Understanding what assets are versus a liability. A lot of us don't know that.
assets, liabilities, and always ask like, what's the return on investment, right? Because things like that suit that you can say, well, it'll get me a job if I have a nice suit, but you certainly don't need to pay $3,000 for a blazer. You can find something much cheaper. And so for me personally, my discipline is that I only buy something for myself when I've earned the right to do so, because through my business, I've got revenues, I've got a return on my portfolio or something like that. And the returns, not my principal, not what I put sweat equity into earning, but the returns on those dollars are what actually give me permission to go out and buy something.
Right.
So rich people or people that have wealth, they have a certain behavior, a certain discipline that comes into play. And so you don't have to be rich today to be rich-minded. And
Right.
rich-minded will change it and alter your entire view of money and how you see things.
Well, Andre, why do you think we, and when I say we, I mean, I'm speaking about us as Black people, why are we such huge consumers? Like, why are we so attracted to, we get the stimulus check and the first thing we want to do is hit the mall?
Part of it, we're being heavily marketed to. Part of it is that, if you never had a lot of money, or I'm not saying, because some of your viewers or listeners do have money. I'm not saying they don't, but speaking generally, when you haven't had a lot of money, or you just kind of getting by, paycheck to paycheck, and then you get a sum of money, when that's been hard to come by in the past because you're trying to make ends meet, you want to do something nice for yourself. And so you can tell yourself, I deserve this. I've worked hard and I've never been able to kind of get ahead. But the reality is that you're not necessarily getting ahead at that point, because you got these bills that are still chasing you.
You're going in reverse.
You're going in reverse. So the opportunity for you to actually be ahead is when you got some cash in the bank that you can kind of lean on when things get a little tough. But we want to, as soon as we get like a pay raise at work or whatever, I'm gonna go out and celebrate and ball out or whatever. No, you need to keep your expenses, everything level. And so anytime you get those surpluses, that's your opportunity. It's called opportunity cost. You can take those additional dollars, whether it's a pay raise at work, or if it's a stimulus, and you can choose to do something where it's like you're a consumer. You do consumption like you typically do. But when you do that, at the end of the day, you have nothing to show for it, but the memory of you felt good at that particular point.
Yeah, you have that memory of that rush that you felt when you bought it.
It was a rush, and now it's gone, and you back to being, you back to square one.
And that's why I say it's like an addiction to retail therapy. For me, I'm only speaking about me, because I've been there. I know what that's like when you go to the mall and you get something really nice that you might just, you've been wanting for a while. Mm-hmm. And you get it's an adrenaline high when you get the new pair of J's that just came out.
Yep.
But as soon as you walk out of the store, probably before you can get into the car or make it home with the purchase, you start to realize, oh my God, I got to pay rent.
Exactly.
What am I thinking?
Or if somebody spills grape jelly or mustard on your jacket and it never fully comes out, you'd be like, I spent $3,000 on this and it never will look the same. Right. So I'm big on thinking about things from a return on investment standpoint. Right. So what I talk to my clients about is, let your portfolio, the investments, the stocks, the dividend paying companies, et cetera, let them pay you. Let your portfolio pay for tickets to Jamaica or whatever it is you want to do. But you first have got to plant the seed.
It really is a mindset shift.
It's a mindset. It is.
It's a mindset shift, and it's so difficult, but you have to constantly work on it, and you got to keep telling yourself over and over again. And some people might even need to go to counseling, like financial counseling, to get to understand.
Or just put yourself around like-minded people, right? So if you're around people that are hyper consumers, and every weekend it's like we popping bottles and we gonna ball out, and you trying to go a different direction, well, that group of people, unless they change as well, you might have to change up your circle with some people that are wealth-minded, right? Mm-hmm. Start reading books, documentaries, everything. Start to teach yourself, feed yourself to get that new type of thinking. And if you do that in the future, you'll be so happy with yourself, because you'll look back 10 years and say, you know what, I stopped wasting money 10 years ago, and look at what I have today. You'll have something to show by changing your behaviors.
Yeah, this is some good stuff, Andre, and I really appreciate it. So, just to recap for everybody at home, uh, this, and you'll be able to replay this and watch it. But some of the key takeaways from our conversation here is to, do an evaluation of expenses and try to cut expenses
Absolutely.
where you can.
Hmm.
Evaluate job security so that you can prepare in case,
Correct.
unfortunate situation of unemployment happens, especially in this
Hmm.
COVID environment.
Hmm.
And in addition to that, in COVID, evaluate your life insurance situation. Do you have it? Do you need to add supplemental? And most importantly, when you get the stimulus check that you're about to get, don't blow it. Don't run to the mall
Right.
with it.
Right.
Maybe put away some for cash
Yeah. You
reserves.
can't you can't even go to the mall. They would make, don't go to Amazon, right?
Don't log on. Don't even
Right.
log on to the computer. Stay
Exactly.
just don't do it.
Exactly.
And that's been my big thing during this quarantine. That the mall was closed, and every time I walked past my laptop, it was like a magnet pulling me to
Right. Right.
one of my
Yep. Yep.
websites that I like to go to buy my nice stuff. So I had
Hmm.
to say, nope, that's it. I had to cut myself off. So
Right.
the thing is, I think we're all susceptible to it, and none of us have figured it out completely yet. We all,
Hmm.
we stumble when it comes to finances, but I think the big thing is we make financial mistakes because nobody has ever taught us how to
Right.
manage money properly.
Right.
I can just remember growing up and watching my mom struggle because she just didn't know. She didn't know what she didn't
Yeah.
know, and
Right. Right.
in turn, I didn't know. And then I went to
Hmm.
college and started making some of the same mistakes I saw my mother make. And that's when I said, you know what, we got to break this cycle because
Yeah.
I can't continue to live paycheck to paycheck. I can't do it.
Right. I know when I first went to college, they had the tables out with the T-shirts.
Oh,
If you come over here and
absolutely.
sign up for a credit card,
Yeah.
you'll get this T-shirt and baseball cap or whatever. And that's the trap. But nobody said, hey, don't get those credit cards or get one that has a limit on it, right, to keep yourself disciplined. And yeah, you're right. We just don't have enough engagement in the educational side of things about money. But I'm hoping that with talks like this, that dynamic or that paradigm shift will start to take place, and people will be more cognizant of what they actually do with their dollars, no matter what size, right?
Yeah.
Yeah.
Andre Williams, Pivotal Wealth Management. Tell them how they can get in contact with you. What's your email?
Sure. My email is awilliams@pivotal, that's spelled pivotalwm.com. So awilliams@pivotalwm.com.
And you can see that right down at the bottom of your screen, how to contact Andre Williams. And I hope this helps some of you at home. I hope it's been meaningful. And, by all means, reach out to Andre. Well, listen, Andre, it's been a pleasure. Thank you very much for coming in to talk with folks about how to get the finances in order. It's a very needed conversation. And I hope that, again, people have gotten something out of this and they'll be able to make better financial decisions. My very special guest, Andre Williams. Andre, thank you very much.
Thanks. And everybody, thank you for your time today. Thanks for listening.